welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform, and every single day I share a lot of new free analysis and education. And in this video, what we will be doing is performing a full breakdown on a pair, both from a technical analysis perspective and order flow perspective. And by the end of the video, you will know exactly what kind of swing trading opportunity we can be looking for on the specific pair that we will be analyzing. So without further ado, let's get straight in the video. Okay, so it's definitely time for an update on the situation that currently we have in the market on NZD USD, because the market just completed the pattern exactly as we wanted to see. So now it's time to understand where is the next opportunity for NZD USD. Now, if you capitalized on my previous analysis on this video for this move to the downside on NZD USD, then great job. Obviously, the USD has been very bullish today. In fact, we had many moves to the upside on USD pairs. Obviously, since here we have NZD USD, it is a move to the downside. With students, we capitalized on a very nice 1 to 3 risk to reward on the USD strength, not on NZD USD, but on a correlated pair. And let's see what is the situation currently on NZD USD and where is the next opportunity. Now, as usual, what we will be doing in analysis is first, speaking about the pair from a technical perspective, we will look at what we have on the monthly, the weekly, and the daily time frame for the directional aspect of the pair. We will also see what we have from a COT perspective. This data is the commitment of traders, so what hedge funds are doing in the market. And obviously, by being able to read how they are shifting their positioning in the market, we are able to follow the smart money and have an edge over our competition in the market. And then we will see what we have from an entry perspective on the 4-hour time frame, which is the best time frame for entry and confirmations when it comes to swing trading. So let's start our analysis from the monthly time frame. Now, on the monthly, what we can see? On the monthly, we can see that the market has just approached a very strong supply area. Now, why is this a strong supply area? First of all, from here, the market had started all this move to the downside. Again, the market tested this area here and it got rejected to the downside. And again, the market is testing currently this area here, from which we expect a move to the downside already from a structure perspective. However, we also expect this move to the downside from a pattern perspective. Why we expect the move to the downside from a pattern perspective? Because follow this move. We have an impulse, a correction, a lower low, and an equal high. Now, if you have an impulse, a correction, a lower low, and an equal high, what do you expect? You expect the market from here to give you a move to the downside. Why do you expect this move to the downside? Because after this move to the downside, the market can start a real move up to complete this inverted head and shoulders. So definitely we expect the market from here to give us a nice wave to the downside and then start a real move to the upside. So at the moment from the monthly, everything is bearish. Let's go down on the weekly and see what we have. Now, from a weekly perspective, we can see that in approaching this monthly supply area, the market has just created this double top from which we can definitely expect continuation to the downside. So on the weekly, the market is failing to break higher and we can expect the market to give us this move to the downside. Going down on the daily, what do we see? Now, on the daily time frame, we had spoken about NZD USD quite a lot of times in the past. The first time that we spoke about NZD USD was after this impulse and correction. When the market was inside of this area, what did we say? I made a video explaining all the reasons for which from here we wanted to see this move to the downside, and that is exactly what the market did. Then again, I spoke about NZD USD when the market was here, explaining all the reasons for which we wanted to see this move to the upside, and that is exactly what happened. And then again, I spoke about NZD USD when the market was here, explaining all the reasons for which from here we wanted to see this move down, and again, that is exactly what the market did. Then again, after the market had created this overextended W formation, I explained all the reasons for which from here we wanted to see this move to the downside, and that is exactly what the market did. And the last time that I spoke about NZD USD was a few days ago after the market had created this overextended W formation And when the market was here, I explained all the reasons for which from here we wanted to see a drop to the downside for the completion of the pattern. And that is, again, exactly what the market did. And on this previous analysis, I will link it all in description so you can go and check it out for further reference, more free education. Okay, so I really suggest you go and check it out. The links are in description. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. And what is the next opportunity for NZD USD? Now, as we have just seen on the monthly and weekly, the market is at a strong supply area and resistance from which we definitely expect the market to drop lower. However, going to the pattern that the market is currently completing, which is the overextended W formation that we wanted to see the market complete, at this point, the completion area of a W formation in general is a support area because it is previous resistance here, which is now turned support at this area, aka the neckline of the formation. So on the monthly and weekly, we have a bearish market. However, on the daily, we must notice that we have support. So even though we want to see continuation to the downside from the monthly and weekly, we do acknowledge that we do have daily support from which we could definitely see the market give us a move to the upside. So how we will be approaching this kind of situation with students? Now that is exactly what I will show you in a few minutes, but first let's go and give a quick check at what we have from a COT perspective, as I said earlier, which is the commitment of traders. So what hedge funds are currently doing in the market. Now, if we check the data for the NZD, we are actually already checking NZD USD. Now, if you're asking yourself, why are we already checking NZD USD? Because all currencies on the spot are traded against the USD. So if you check NZD, you are already checking NZD USD. And what we can see with the last report is that institutions have closed another 2,000 long positions. 2.1K longs got closed with the last report, bringing the long exposure from 45 to 50%. So we must note that the long exposure did increase. Now what we see here with the short exposure is that also the short exposure increased from 34% to 41%. Now if you look at the net positions, we can see that we went from 6.9K net positions to 3.2K net positions. So overall, net positions are clearly decreasing on NZD USD, meaning that we are having now way more shorts than longs. The amount of shorts compared to the longs is increasing. In fact, if we go and see what we have here, we went from having 14K short positions and 21K long positions to now having the same amount of shorts, actually a little bit more, because we went from 14.4K to 14.7K. And if we look at the longs, we went from 21.4K to 18K longs, meaning that we went from having more longs than shorts to having a little bit more shorts, but definitely way less longs. Meaning that what is happening at this strong supply from the monthly is the preparation for a possible move to the downside. Meaning that institutions are starting to close their longs and add some shorts. Now the real shorting still needs to start. And the reason for which it still needs to start and it hasn't started already is that we still have quite strong support here, which is exactly what we will be waiting with students for the market to break. So what we will be doing with students is waiting for the market to break below the structure. Why? Because this previous resistance that is now support here, if it will be broken to the downside, it will be turned again resistance at this area. So from here until the market will remain above the area from a daily closing perspective, the market can easily break higher. However, until we will remain above the area, we can pop. But if the market will break, then that is where all this zone here will be turned resistance. Inside of this area, we will have massive resistance. So with students, after the break on the retest of the level, what we will be doing. Now, as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So after the break on the retest of this structure with students on the 4-hour time frame, we will be waiting for the market to shift from a bullish to a bearish market. And as soon as the market will shift from a bullish to a bearish market and provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward, and at that point, very good probabilities for the move to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. In fact, every single day I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out, and I will see you in.